Hi everybody, this is Dan Sheridan at Sheridan Options Mentoring. Welcome to Good Friday. We're off today. As we look at SPX here, it's kind of historic in the sense that VIX is the first time in over a year we've hit the 17 level. And you say, why? Well, because we're in the 4,000 levels. We're finally up in this level. You can see it's basically been kind of range bound, slowly trending up over the last half a year or so in the SPX, and VIX hasn't got down to pre-correction a year ago levels, but I think the last 4 or 5 months we've been in this level of 20 to 28 in the VIX, and now we're I think in that 16 to 17 level. I think we'll be there for a little bit to maybe 24, kind of a little bit transitioning here. It's like Mary Poppins, when the wind is changing, she left and went somewhere else. The wind is changing here, but I think there'll be a little bit of fireworks here, and I don't think we'll go much lower than that for at least a couple weeks or a month. And so I'm looking at opportunity. I'm looking at as a calendar. So the one I drew up here, I'm buying the April 23 at the money 40-20 call, and I'm selling the at the money selling one April 16 40-20 call. And so April 16 is 2 weeks from today. This is something I wouldn't look at today. You say, why? The market's closed. So I would look to put this on Monday, wherever we're at the money Monday, I think. And what's nice is you put these calendars on, and you can see this is your expiration graph in 2 weeks. Again, this expires 2 weeks from Friday. The most I'd stay in this would be about 7 days. And so you can see the profitable area, the expiration break-evens, where the profit line crosses zero at expiration, is about the expected move over the next week, about 50-55 points. So even without adjustments, this gives you plenty of room. It's going for around 1050 debit. So if I'm looking to make normally in these maybe about 8%, so it's about 1,050. If I'm looking for 8%, if I can sell this out at 1130 credit, I'd be happy as Swiss cheese. I don't want to lose more than 10%. So my max loss would be if we start getting a 950 or lower, show me the door, as they say. Adjustments, generally, I'll just give you one on the upside. I wouldn't worry about adjustments if you're beginning with calendars. Wax on, wax off, as the Karate Kid would say. Learn that first. Learn to just follow a few basic, okay, I put it on, profit target, max loss, there you go. Once you've got 10 or 12 under your belt, then normally with calendars, one adjustment we do on the upside or downside. As we get near the expiration break-evens, you can see in this trade, we're putting it on. The strike is 40-20. That's where SPX is. So I'd be looking up near the break-even point, which is up about 50 points. And you can see it's like 40-70. So up at that 40-70, I'd add another, if we were to get up to that area, I'd add a calendar at the 4100 level. So then I'd have one calendar at 4100 and one calendar at 40-20. So I have a nice wide tent to let the SPX drift into. Those are some thoughts, folks. Have a great holiday here. Next time I'll talk about split strike calendars. That's a calendar that gives you about 30 to 40% less risk on the downside. So next week I will cover that. Thank you.